Federation Accounts Allocation Committee shares 762.5 billion naira. Federal government raises 35 billion naira for climate change projects. Nigerians abroad remitted $25 million in 2018. Plus, oil prices outlook supporting Nigeria's growth. These and more will come in detail on this edition of Business Express on the network service of the NTA. I am Muplang Dakok. The Federation Accounts Allocation Committee has distributed a total of 762,597 million naira, including VAT and exchange gains, to the 3 tiers of government as revenue allocation accrued for the month of June. Chimobi Walter Naji reports that distributable statutory revenue for the month of June is 652,949 million naira. This is higher than the over 571 billion received in the month of May by 81 billion naira. The report shows that revenues from petroleum profit tax and companies income tax increased significantly, while value-added tax increased marginally. Royalties, import and excise duties decreased considerably in the month of June.
This amount is subjected to deduction by way of cost of collection, 7% to Nigeria Customs, 4% to Federal Inland Revenue Service, and 4% to DPR. And there is also a deduction by way of transfer to excess crude account of 35 billion. There is also refund, 2018 refund to the Federal Inland Revenue Service, giving a net statutory allocation or figure of 595,376 million naira.
Still on revenue, the federal government has granted 35 billion naira in 2019 through green bond to fund projects with green potentials to mitigate climate change. Already, Interministerial Committee is meeting in Abuja to perfect arrangement for project selection and disbursement.
In identifying projects for each issuance, we expand our sector coverage and improve our understanding of the climate elements of the initiatives we are proposing through our capital budget. Through that, you will not only extract the emissions reduction components and the economic benefits amongst many other development targets, in backing the issuance of green bonds with assets, as the financial advisors describe our projects, we give DMO, that's the Debt Management Office, a stronger case in settling the financial instruments that fund our annual budget.
As investors who will give us the money for the green bond. Okay, they were asking us questions. The one you issued in the first one, where's the report? Where you're supposed to have produced ABC report. So utilization of the first one was extremely slow. And let me add where concerns us as a DMO and as a country. When we've raised money, we've borrowed, right, from the market. The money is not free. The federal government pays interest. So we've raised it. It is sitting in the central bank. The MDAs are not using it. Okay, so that means we are paying interest on money that we are not using. So in terms of cost efficiency, that's not also good for us. So my two charges, if I may call them that, is, can we do the product selection early so that the green bond is issued within the fiscal year to which the budget relates? The second one is, can we do something about utilization to make sure that we haven't raised money and we're just sitting on them slowly?
The International Monetary Fund, IMF, says that despite its reversal of Nigeria's growth forecast, a positive oil price outlook will support the country's economy in 2019. The development is still reaffirming Nigeria's dependence on the performance of hydrocarbon despite seeming improvement in non-oil export and diversification efforts. The global institution also noted that the fortunes of the sub-Saharan countries will come from non-resource intensive countries, which would partially offset the lackluster performance of the region's largest economies. And export of prepared sheep and goat leathers has the potential of attracting about $23.5 million into Nigeria in the next 2 years. Data from Nigeria Export Promotion Council (NEPC) shows that Nigerian exporters can make about $6.3 million from the export of prepared sheep and $17.2 million from the export of prepared goat leathers from now to 2021. The National Bureau of Statistics (NBS) reports that in the first quarter of 2019, Nigeria exported $5.78 million worth of prepared goat leather to Spain, Italy, India, Portugal, and China. Wheat and rice are the most consumed food crops around the world, and over 600 million tons of wheat is consumed annually through more than 16 million cuisines. Now, Nigeria and other African countries depend on the importation of wheat to meet demand. In this report, Musa Baba Aliu takes a look at Africa's initiative in meeting that demand.
Talking about bread, it is as good as talking about wheat, which is a major ingredient of flour used in bread making. As the demand for flour continues to increase, so also that of wheat, not only in Nigeria. Same situation applicable in the entire African continent.
People have developed the urban culture of eating wheat in various forms. Wheat as bread, wheat as spaghetti, wheat as couscous, wheat as even noodles.
Consequently, the continent relied on Europe and America for the supply of wheat to close the demand gap. For instance, Nigeria alone has a deficit of more than 4 million tons annually, while the local production remains at 1.4 million tons. However, Nigeria and other 7 African countries have set a target towards meeting their wheat demand by improving on its cultivation.
Now we have proven technologies that double and triple productivity in heat-stress agroecologies of Africa. Therefore, if you adopt, if you scale up, and if you create market for the farmers, it is possible that Africa can fit by 2025 with the wheat produced in Africa. And particularly when it comes to Nigeria, I want to specify it.
Agriculturists participating in the project say Nigeria, Sudan, and Ethiopia are making significant progress. Permanent Secretary, Federal Ministry of Agriculture, says more support will be given to rice and wheat farmers in the country.
And that will help Nigeria to achieve food security, human security, socio-economic, cultural security.
The meeting is reviewing the journey so far in the introduction and adoption of indigenous technology in improving wheat production.
So, to discuss the economic potential of wheat for local consumption and export, as well as its economic impact, is Solomon Assefa. He is the wheat project Coordinator for Africa. Thank you for coming on Business Express.
Thank you.
So Nigeria is also a producer of wheat and other African countries as well. But why is it that the continent seems to rely so much on importing wheat?
Very good. The first thing is wheat is not a traditional crop to Africa.
Okay.
And most of the varieties we used to grow in the early days were not improved varieties, so the productivity was very low. But with the advance of science and improved technologies, and especially heat-tolerant wheat varieties, now in Africa, it is possible our farmers to grow and produce wheat with 4 to 6 tons per hectare, which is much competitive, and therefore now there is an opportunity for African to produce and feed ourselves if we make the commitment at the political level and if you create market for our farmers. But so far, we consume a lot, but we produce very less. That's why Africans are importing more than 60% of our demand from other parts of the continent.
So by the way, if you are to put tag a volume to the millions of tons that we produce in Africa, how many tons would you say we produce? And then how much do we spend on wheat?
Very good. In Africa, we produce around 25 million metric ton from 10 million hectare.
Okay.
However, on the contrary, we are consuming over 67 million metric tons. So the deficit of 42 million metric tons is imported from other parts of the world.
Okay. So is there any effort by Africa to improve its production so that it can bridge this gap in terms of what we produce and then what we consume?
Thank you very much. And for this amount, Africa annually spent over $15 billion to import wheat, and which is very painful to Africa. And the reason what I'm emphasizing today in Africa, we have a proven technologies and we have a very successful effort through the previous FDB supported SARDC project. And now with the third project, we have seen tremendous improvement in terms of expanding improved varieties and technologies in Sudan, in Ethiopia, in Nigeria. And we have seen in 1 year alone, if you take, for example, in Sudan, they managed to increase the national production by adopting improved technologies by 25%, which means, and the progress is the same happening also in Nigeria and Ethiopia, which means if we Africans, with the right policy support and making wheat a national agenda, and if we support our farmers to get improved seeds, improved inputs, and if you create access to market to our farmers, it is possible that we Africans can feed Africans with the wheat produced in Africa.
Okay, you talked about what Africa can do, but what about Nigeria in particular? Let's narrow it down.
Very good.
What is Nigeria doing and what more needs to be done?
Thank you very much.
Yes.
It's very important point. In Nigeria, now we are saying it with the heat-tolerant varieties released the last years. There are very well improved varieties that can suit to Nigerian growing environments. And therefore, what is needed now is to take these good success stories that we achieve in farmers' field to a scale in different wheat growing regions of the country. But for this to happen, the very important thing is the Nigeria government should make wheat a national agenda. It should be politically supported and driven, because we know that wheat is not a commodity, but it is a political crop. And therefore, the first thing for Nigeria to achieve self-sufficiency and to expand wheat at a scale so that our farmers can produce in all wheat growing regions of the country, the government should take wheat as a national agenda, and there should be a supportive policy that enables wheat production, processing, and marketing in the country.
Okay, so do you think that Nigeria is ready? You said it's a political crop.
Yes.
That's wheat. So do you think Nigeria is ready to face the challenges that will come when wheat is banned completely from being imported into the country? Are we ready for that?
Thank you very much. I have been here to Nigeria the last many years, and with the national partners like Lake Church Research Institute, like IAR, ABU, and the SG 2000, we have seen that there is a clear commitment from the scientist and technology side. And I have seen also, year in, year out, increasing political commitment. However, I believe it must be a major policy change in Nigeria over the coming years, which I see is happening, because our farmers are encouraged with the improved varieties, they are adopting it, and they are increasing their productivity from 1.7 ton per hectare. Now, farmers with improved varieties are getting 4 to 6 ton per hectare. So Nigeria is now ready for launching a national wheat self-sufficiency program. And I see that with the right policy support, Nigeria can achieve wheat self-sufficiency in the coming years. By 2025. We feel there is a land, sufficient land, Nigeria has sufficient water, and we have sufficient improved technologies, and we have people who are ready to take the technology and to show impact at scale.
Okay.
With this right combination, I feel it is possible for Nigeria to achieve and feed its people with the wheat produced in Nigeria.
Okay, let's move a bit away from wheat. Let's talk about the African Free Continental Free Trade Area Agreement. Do you think that African countries will be able to, how do you think they can handle the various currencies of each of these countries when it is fully implemented by next year, 2020?
I believe that this will extremely accelerate the trade, and extremely accelerate also alignment of working together in terms of exchanging technology, in terms of exchanging products, and facilitating market will be enhanced when this initiative is implemented starting from next year. And this is also a very important boost to accelerate agricultural transformation in Africa.
Okay. Still on the agreement, what do you think the private sector can do to, to improve or to cement the relationship between African countries when this agreement is fully implemented?
Excellent.
The private sector.
Excellent. Let me add also on the wheat. For the wheat to succeed, the right policy is critical, especially policies that favor the engagement of private sector in seed production, wheat production, processing, and marketing. This holds true for other crops. And having said this, I will give you one very good example that we are initiating within the TAT program, and which I believe when this policy initiative is coming at Africa level will accelerate. Now, in Nigeria, we are planning to embark on a major wheat production in the coming season. And in Sudan, Sudan has vast land and also huge water resources. And they have sufficient improved seeds that can be readily moved from Sudan to Nigeria to catch up the target we set for this year. And such kind of initiative can be accelerated if we create a common agreement between countries to advance agricultural development, trade, knowledge and experience exchange, and also develop Africa all holding together for a better livelihood.
Okay. On a final note, let's talk about transportation. When this agreement is finally implemented, what do you see the role of transportation in, uniting us and then improving trade between the member countries?
That is very critical.
Okay.
Transportation makes making business happen within time and also with a fair cost for the business people to make business across countries. And for this particularly, the train, which I believe is now coming and expanding in Africa, and also transportation which connects African countries, is a key driver which accelerates business and agricultural transformation in Africa. I believe this agreement will pave a way for we Africans to work together and trade one another and develop commercialization within Africa.
Thank you very much. Dr. Solomon Asefat, you're the project coordinator of Wheat for Africa. Thank you for coming on Business Express today.
Thank you for this opportunity. Okay. Thank you very much.
All right. So, how are commodities faring in the market as gold ticks up ahead of U.S. GDP data? The euro has steadied on the international currency market. Let's see how the naira is exchanging for other currencies. The National Association of Chambers of Commerce, Industry, Mines and Agriculture, Nasima, has inaugurated its 20th national president, Saratu Iya Aliyu. The first deputy president is Ide John Udebala, while the second deputy president is Dele Kelvin Oye. Nasima, which is a body that encourages bilateral and multilateral business relationships, also projects, promotes, and develops all matters affecting commerce and industry and women and youth economic empowerment in Nigeria. The equities market today, 26 July, closed on a negative note as the all-share index depreciated by 0.26% to close at 27,918.59 basis points, with market capitalization at 13.6 trillion naira. A total of 130.8 million equities valued at 2.6 billion naira exchange hands in 2,749 deals at the end of the session. Chi PLC was the most active that boosted market turnover, followed by Zenith Bank and WAPCO. MTN Nigeria, Fort Oil, and Owando were the most active stocks that recorded impressive points, while Seplas led the decliners. And on the global market, Asia Pacific stocks broadly declined on Friday amid expectations of less aggressive U.S. Federal Reserve. Bosede Ebel has that report.
The European Central Bank kept rates steady, but said that it could lower them in coming months and that it was ready to deliver further stimulative measures. The outlook now is that the Federal Reserve will trim rates by just a 0.25 percentage point, not a half point as some had suspected. European stocks were marginally higher in early trading of Friday after the European Central Bank suggested it could lower borrowing costs to tackle slowdown in the Eurozone economy. DAX Index rose 0.25%, FTSE 100 0.21%, and CAC 40 0.11%. Stocks in Asia were on the decline amid expectation the U.S. Federal Reserve could be less aggressive than expected with monetary policy when it meets next week. Shanghai Composite rose 0.24% to 2,944.54. Hang Seng Index fell 0.7% as of its final hour of trading, and Nikkei also slipped 0.45% to close at 21,658.15. Stocks in the United States moved higher as traders digested corporate earnings, looked ahead to fresh data, and weighed the possibility of a less dovish tone from the Federal Reserve next week. Dow futures were up 50 points and indicated a higher open of 30 points. The S&P 500 and Nasdaq Composite were also seen higher. While in Africa, stocks were mixed. Nairobi All-Share and Namibia Overall Index were positive, while Tunisia's Tunidex, South Africa's JSE Top 40 and Ghana's GSE Composite were negative.
Thank you, Bosede. And with that report, we wrap up this edition of Business Express. Be informed that all previous episodes are available on YouTube, and our Twitter handle is @NTA News Now. Remember to join us same time, same station next week, Monday. I am Muplang Dakok. Do have a lovely weekend.